That is a disaster nightmare. So, all right, welcome to Talking Investing. I am Tom, and as always, this is not financial advice. Today, I want to talk to you about Lucid, stock ticker LCID. They are a high-end EV manufacturer. We talk about the EV stocks quite a bit on this channel, both the large cap and the small cap. So if that's content that you're interested in, remember to please subscribe to the channel and hit the notification bell. Also, everybody do us a favor and smash the like button. It helps out the channel a lot, and we really appreciate it. You will see in our pinned comment below a link to our free Discord, so you're welcome to come over there. I want to talk about Lucid because they put out their quarter one earnings for 2022, and I want to go through the numbers because there's some numbers in there that I don't think people have really dug into. They have a gigantic problem inside of their financial statements. And as I read through their earnings report and I listened to their earnings call, I really did not get the sense that management understood the sense of urgency that is necessary given what is going on. So I'm going to explain to you guys what I'm talking about. There's a problem they need to fix. And if they don't fix it, they really can't go on in the future. And they have a gigantic problem that absolutely has to be fixed. Okay, so let's start out by looking at where they closed on Friday. $18.15. That's near their 52-week low of $16.12. This stock has traded as high as $57. Their current market cap is $30 billion. So that, in my opinion, is a very large market cap for a company that in the first quarter of 2022 delivered 360 vehicles. All right, Lucid reports first quarter 2022 financial results, May 5th, 2022. So this was just a few days ago. Okay, Q1 revenue of $57.7 million, driven by customer deliveries of 360 vehicles in the quarter. That is up from 125 vehicles in the quarter of the previous quarter. So while that is a significant increase quarter over quarter, you're talking about a vehicle manufacturer with a market cap of $30 billion. So, 125 sales in a quarter up to 360 in a quarter. They haven't even started getting where they're going yet. So I think that they will. We'll look at the rest of what's going on here. Strong demand with more than 30,000 customer reservations as of today, reflecting potential sales of $2.9 billion. So there you go. They've got a lot of deposits. Now, the threshold for a lot of these deposits are small, but let's even say that they have 30,000 legit deposits. So that's $3 billion worth of sales over the next couple of years. So you could see them getting to $1 billion this year if they do everything right. They did say on the conference call they're planning on $2 billion of CapEx in 2022. So, that will increase their production capacity greatly. However, it will cost them $2 billion of cash, which is another one of my issues with them. Okay, next thing. Production volume outlook of 2022 remains on track at 12,000 to 14,000 vehicles. So they reiterated their previous guidance of 12,000 to 14,000 vehicles. They did say there's still a lot of supply chain issues and a lot of cost issues. While they maintained their forecast, they did give a little warning that, things have not cleared up yet. Okay, they announced new pricing effective June 1st, while they will honor the current pricing for all existing reservation holders. So they learned the lesson that Rivian just went through a month ago. Okay, so they then go on to kind of reiterate everything we just talked about. But the one thing that they add here is that they ended the quarter with close to $5.4 billion of cash on hand. And then they say, which is expected to fund the company well into 2023. Okay, so $5.4 billion obviously is a lot of money. However, if you look at their projections for 2022, they're projecting to lose about $2 billion in 2022. They're also expecting CapEx expenditures of $2 billion in 2022. So that's $4 billion of the $5.4 billion right there. So they're kind of giving you a heads up that they have basically a 1-year cash runway right now. So that is a problem. That is still not my big problem with them. But that is a problem that needs to be addressed. It looks to me like they've got about a 1 to 1.5 year cash runway, and they're going to need to raise more money either through debt or equity. They will not be cash flow positive anytime soon. Okay, then they say we continue to make progress in the first quarter of 2022 despite ongoing global supply chain challenges. We are nearing completion of deliveries of the Lucid Air Dream Edition, and we begin deliveries of the Lucid Air Grand Touring with an EPA estimated range of up to 516 miles. They do have an outstanding car. This is an ultra high-end vehicle. So in addition to that, their battery is lasting longer than most of the competition. Getting 500 miles on a charge is outstanding. So these are the things in the plus column for Lucid. I don't want to act like there's nothing going on here. They have an exceptional vehicle from all indications. As of June 1st, the new pricing will be $154,000 for the Air Grand Touring, $107,000 for the Air Touring, $87,400 for the Air Pure. The price for the new Lucid Air Grand Touring Performance model, announced just 2 weeks ago, will remain at $179,000. And then they say these prices are for the base models. So you can see this is an extremely expensive car already. And my issue is, even at these prices, they are losing a massive amount of money. But I'm going to go one step deeper than that, because you expect startup companies like this to lose money in these high growth period times. What concerns me is not that they have a net loss, they have a negative gross profit, and it's not a little problem, it is gigantic. So I want to go look at that. You will see cost of revenue. This is their direct costs. So I want to be clear. Direct costs are the supplies, materials, and labor it takes to make the vehicles that they sold. So their direct costs were $245,970,000. That gives them a negative gross profit of $188 million on $57 million of sales. That is a disaster nightmare. So this problem is more difficult to fix by far. And I'm going to run through some of the numbers. I made a quick spreadsheet just to illustrate how upside down they are right now on their vehicles. So you'll see total sales revenue, $57.6 million. They sold 360 cars. So their average sales price per car all in was about $160,000. So like I said, you can see these are very high-end luxury vehicles. And, we saw their base model pricing, but obviously, by the time people are done speccing these cars out, these are luxury vehicles. So that sounds like good news. $160,000 average sales price per car. But here's the problem. Direct costs were $245,970,000. Divided by the 360 units that they sold, their cost per vehicle was $683,000. So I want to make a few things clear real quickly. Some people misunderstand what direct costs are. So in other words, if you think that, they sold 360 cars, but maybe they made 2,000. Well, that doesn't go into their direct cost. Whatever the cost of the rest of those cars are, that would go on their balance sheet as inventory. And then you may say, they built out a lot of their facilities, so, that was a lot of money. But that is not in their direct cost of sales either. That goes on their balance sheet as property, plant, and equipment and gets depreciated over time. So there's a small amount of money that's depreciation. But this really is the cost per unit. Now, there's a few things that make this a little better than it sounds. There was a big write-off in there of $91 million, so that was kind of a one-off thing, so that helps a little bit. But I did a calculation. Right now, based on their current numbers, if they increased their sales price 100%, which they could not do, they would be ludicrously uncompetitive at that point, then their sales price would be $320,000 per car. If they were able to cut their costs in half, so a 50% reduction in costs, that would get their cost per car down to $341,000. They actually, if they doubled the price of their car and cut the cost of it in half, this company would still be losing money every car they sold. Never mind their overhead to run a business. This is just direct gross margin. So their gross profit would still be negative in this scenario. So I've painted this out and I've showed you the numbers, and this, looking at it from this perspective almost seems unfixable. But I will tell you, this will get better, right? They will find a lot of efficiencies. There will be some economy of scale as they scale up. So the question is, how long does it take them to get there? What exact steps are in place to get the cost down? Really, they need to get these costs down 50 or 60 or 70%. So I did not really hear management say a single word about that. They said, freight costs were very high. Well, let me tell you something. Freight costs weren't $683,000 a car. So that is a very tiny part of their problem. And yes, freight was a problem, but it's insignificant compared to the average cost per vehicle that these guys are dealing with. So they need some big cost cutting. This battery that is so superior to everybody else's may just be too expensive to make. And or they may be on the brink of some better technology to reduce their costs. So I'm not saying they can't fix this problem and that they won't fix this problem, but what I'm saying is, really, when you look at this company, nothing else really matters. They have about a 1-year cash burn rate, and their direct cost of sales are astronomical. So they've got some work ahead of them. So my issue with this company is it's right now valued at $30 billion. So everybody should understand, this company is not Tesla. Tesla makes money. They have a high gross profit margin per vehicle. And yes, it took them a decade to figure that out, but I am concerned that that's where this company is. They're a decade behind Tesla, and they don't have 10 years to figure this out, right? Because between Tesla, Ford, General Motors, Volkswagen, and a slew of others, the EV sector is going to be very competitive. Also, BMW and all the other high-end vehicles are getting into the space as well. This is an ultra-competitive space, and here's a company that, to me, they have a monumental amount of ground to make up on their cost per vehicle in order to sustain themselves. So I am concerned that the price of this stock could potentially plummet over time, because with $30 billion of valuation, a year from now, they may be down to $1 billion in cash, having a $1 or $2 billion loss on the year. Is that really still going to be a $30 billion company? I'm just not sure. So I'm just going to very quickly go through the chart. You'll see in November, Lucid was trading at around $57, just under $58. So from November to where they closed on Friday, they're down about 68%. So that is a big decrease. But I will tell you, a massive number of my watch list, including almost all of the small cap EV stocks, are down between 80 and 95%. So this stock's down just under 70%. That may not seem like a big deal, but there could be a long way to go on here. So from a technical analysis standpoint, I will say they have something going in their favor. This stock bottomed out on September 1st of 2021, and it was really a capitulation day. You can see it closed way off of its lows. It was actually up on the day when it hit its all-time low, which was at about $16. It's currently trading at $18.15. There's a very strong line of support at $17. So really, there's two ways to look at this stock. From a technical analysis, maybe this line of support will hold up at $17, but again, that leaves them at around a $30 billion market cap. So I am concerned that they are going to break out of this. And once they break to the downside, if they break below this $16 mark, there really is no other support underneath that. Everybody who's driven it says this is a fantastic product. Their specifications are amazing. The car looks sharp. I would like to know, as an investor, what's management's plan to bridge this gap between their sales price and their cost of sales? So until I know an answer to that, this is a stock that, for me personally, the risk reward is not there. So obviously, this is not financial advice. You guys need to do your own due diligence. This stock is holding around its line of support. So, you need to draw your own conclusions. I am afraid that line of support won't hold, and if it doesn't, then I don't know where the bottom is. So that's all I've got on Lucid Motors. Thanks so much for watching. If you're still with us, remember, please subscribe to the channel and smash the like button, and we will see you in the next video.